Traders, welcome aboard. Joseph James. It's June 14th, 2011. A Tuesday morning here in Live Trade Room. A Tuesday, not just your average Tuesday though. This is Tuesday of OPEX, right? Now, of course, this isn't just your average OPEX. This is the quadruple witching OPEX. So, of course, Tuesday morning, January 14th, your live trading recap. Had a pretty good day today, right? Actually, that's an understatement. We had a really good day today. Excellent day today. Yesterday was completely different, right? Yesterday morning, Monday morning, had no news, right? Had nothing happening early. We got that late morning move, right? Early afternoon move on crude oil. Made some pretty good money yesterday, but today, right? Today was why we deal with days like yesterday, right? If every day was like Monday was, we probably wouldn't be as excited to come in every day. But when we have days like today, it quickly reminds us, right? We get more days like this morning, right, than we see pretty much anywhere else. So we get a lot of good action this morning, and we knew it was coming because we had 8:30 news this morning. Now remember, we're looking at this at a week, right? A week snapshot. We know tomorrow's Wacky Wednesday, we know OPEX is on Friday, and we know we're going to get real sloppy later on in the week. So we're really looking forward to getting some money in this market early in the week. Didn't get much out of it yesterday. Here this morning, we knew this morning, Tuesday of OPEX, Tuesday of quadruple witching. Major news at 8:30. Now this news, again, we talked about this in the morning prep this morning. If you went to the blog, Sideways Markets, we typed up the entire morning prep, and in that morning prep was this news. We talked about how we had PPI, right? PPI, inflation. Remember, inflation's on everyone's minds right now. And PPI, how much are goods costing to produce? That was at 8:30. We had CAD news at 8:30, and then of course later on in the morning we had business inventories. Those are all very, very important pieces of information. So we had a bunch of news starting off at 8:30 this morning. We checked our dollar, and what was the dollar doing? Remember that dollar? The dollar had risen up on Monday, but it began to go sideways yesterday. Remember that? And this morning the dollar had made new lows. Well, this morning we said, all right, the dollar is in a transitional area right in the middle of its range, but it's trending down. We still had that bear channel in the dollar. Open up your 13 range chart in the dollar. We talked about this morning, and we saw a bear channel. Well, that bear channel, what does that tell me? It tells me downward sloping trend of the dollar. It was a little bit sideways, if you recall, so we didn't know at first. We didn't know if that dollar would keep dropping or if it would go back up. So we said we had a sideways range with just a little hint of bearish trend. And of course, we know what a bear trend means in the dollar, negative correlation. Again, we talked about this at 8 o'clock this morning. If the dollar keeps making new lower lows, I'm going to be buying pullbacks on whatever market I trade. And it just so happens that we then opened up our crude chart and we said, wait a second, guys and gals, the dollar is dropping, and here's my crude oil now above the previous low of day from yesterday, below the previous high. We call that an inside day. But the big thing was that we were rising on the crude. You can see down bottom here, follow me down, guys. Now, normally I give you guys an 89 range chart. This is my 34 range chart, right? Great for day traders. This is my slow time frame for day trading. I look for the levels here. You can see my auto levels indicator marks up all of these important levels for me automatically. That's what we call the auto levels. And so we saw right away on the 34 range chart here, we saw this very easy bull channel. And so naturally, if I begin the bull channel with a swing low, I'm looking for swing lows all the way up. And so what we did was we said, all right, I'm going to extend this channel all the way up here. And so that was what we saw standing out at us first thing this morning. We had the previous lows below us, so we weren't making new lower lows. Right, get the previous lows below us, not making new lower lows. And it was amazing because it lined up perfectly with the dollar, of course, dropping, with the crude at the lows, and with this bull channel. It gave us a really strong correlation here now, obviously. All we had to do now was wait for the market to come to us. We had a couple of concerns, though. Remember, inside day. What does an inside day tell me? An inside day tells me that when I'm inside a trading range, for example, right, here's my immediate trading range we defined. An inside day told me if we get up to the highs here, I should try to sell the highs first and then look to buy a pullback. Well, our first two trades of the day today on crude oil, one, sell the highs, came back up, sold it again. And then by 10 o'clock, we had broken out, made new higher highs, and I was buying pullbacks. So first things first here, we're trading around here 8 o'clock. At 8 a.m. this morning, here we are in the no trade zone. We're going to make our way up to the highs, right? Not just the high of day, but the highs of the channel. I'm now going to sell those highs. Now I'm going to show you this exact entry on the next slide, guys. All right, so this is a 4-range entry. No pattern on my 13 range, but I'll show you guys the pattern here in a moment. 903, we sell the highs. Inside day, right? Follow the plan. 10, 20, plus 22 ticks for the runner is a 44 tick winner. So we sell the channel highs. We make 440 USD in the first trade. Inside day, easy trade, right? Easy trade. If you look down bottom, momentum was overbought, right? Perfect. It was a perfect setup. Now, of course, we then head back down into the no trade zone. And we say, all right, guys, I've either got one of two options. If price drops back down, I'm going to buy those lows. If it rises back up, you got it. I'm going to sell those highs. Once again, high of day, inside day, sell the highs. 936. These were the same trade, the same exact entry, 97.67. Now, this second trade obviously didn't get nearly as much. You can see it chopped around a little bit. Plus 5 times 2 is 10, plus 10 is 20, $200. Sell the channel highs, same trade, right? Same trade. That was also a fast track winner. So everyone made our 10 ticks, $100 there on the fast track. So we began our day with a bang. Over 64 ticks of profit. Not a bad way to start. Now, of course, we're thinking to ourselves here, is this a wave pattern long? Could be, but into the highs? No thanks. I want to sell those highs. I try to sell the highs and I realize, nope, there's my BMT right there. Not going to sell into those highs, but we watched it and we saw that the sellers failed. Meanwhile, we had located double top, right? Double top. That double top told me, look to buy support. And we had to assume the support we'd be looking for here would be the lows of that channel. So I was hoping that after that double top, we'd come down, hit the lows, and I could buy the lows here and bring it right back up. Didn't happen that way, as you can see. It stalled out at the 97.50 and started rising again. Now, once we saw those sellers fail, right? Once we saw this 2-step short, once we saw those sellers fail and then jump back up, we knew right away if it was able to move the lows, it would have, and therefore we better be aggressive here trying to get long here. So that's why I took this trade here into the highs. Higher risk, of course. Remember, there were 2 reasons why this trade right here was higher risk. Right there. It was higher risk because of A, inside day, we don't expect to be breaking out, and B, we're at the highs of the channel.